Impressed. We're live.
All right,
Hey.
very good.
Awesome. All right,
fantastic.
Everybody, welcome to the 18th Crypto Mining Tools podcast. And we're here with Ethan, our co-host.
Hi, everybody.
And Matt DeSouza.
Hey, guys. Thanks for having me, Scott and Ethan.
Yeah, did I say it right? DeSouza?
DeSouza.
Yeah,
right?
DeSouza.
Oh, DeSouza. Okay, fantastic.
Yeah.
Good to know.
And Matt is from Blockware Solutions, and he's got a couple of different ventures going on, but he's a friend in the industry, as well as a competitor, actually, to mine and Ethan's company. But like we say, we like to cooperate together, even though we're competitors, and we call that co-opetition.
Co-opetition. I love it.
Yeah. So, a rising tide floats all boats, right?
There you go.
Absolutely.
Yeah. So Matt, you have some interesting research that you've been putting out recently with your company, Blockware, and I know we've got some really good topics to discuss today. Why don't you just tell us a little bit about yourself first?
Yeah. I guess I really started dipping my toes into the blockchain space in 2015. That's when I started investing. And then it was actually, ironically, it was more Ethereum. I was more interested in Web 3.0, and I really dove into Ethereum first. In 2017, with a partner, I launched Blockchain Opportunity Fund. That's a digital currency hedge fund.
Okay.
And it was mainly focused on Ethereum and Web 3.0. In probably Q3 of 2017, my partners and I launched Blockware Solutions. It was kind of almost a fluke, honestly. My brother's roommate in college, he reached out to me and he said, "There's this arbitrage in the mining space. I'm selling these mining rigs on eBay. It's a great opportunity. You got to look at it." And I gave it a shot, and we saw this opportunity where there's miners were waiting 2 or 3 months to get mining rigs from China.
Yeah, we know that pain.
This was 2017 in the heat of the bubble. And a lot of miners in the US were getting scammed. And we said, let's be the trust and transparency group. Let's just mark up small margins and get these US miners mining rigs. So that's really how Blockware Solutions kicked off. We were small in late 2017 and we've grown a lot. We're a team of 5 now. The past 12 months, we've sold probably about 30,000 ASICs. Placed about 25 megawatts worth of miners, and our core focus is in the US. Yeah, so it's been quite a ride, and most importantly, it's allowed me to deeply understand the Bitcoin space, understanding how much infrastructure is getting deployed towards the Bitcoin network. I mean, that's network effects. That's longevity. Mm-hmm. Everyone discusses Ethereum and Web 3.0 and their network effects. Let's discuss miners in all these countries around the world deploying millions of dollars worth of infrastructure to secure a network. And that's just one bucket of the Bitcoin network. Then you have the developers and the areas that are building it out. So that's a network effect. That's how things stick around. And my fund actually pivoted a bit. And we've taken significant positions in Bitcoin through those insights. So, and now, basically January 1st, 2020, we launched another company that's called Blockware Mining. My partner and I, Mike Stolzner, and we're mining Bitcoin in the United States, in Kentucky. We're running about 100.
Fantastic.
Yeah, we're running about
very close to where I am.
You got to come visit. Okay. We got 180 petahash down there in Kentucky.
Eastern Kentucky, Western Kentucky, Northern, Southern. Can you give me?
It's near the Illinois border. We keep it fairly confidential.
Okay. Yeah, I don't want to know the exact location, just a general idea.
Next time, there's only going to be 2 screens on this YouTube video, right? We've got a really cool model with Blockware Mining. We're removing the friction for U.S. miners. So we have S17 pluses on site. U.S. miners can buy those machines immediately, get up and hashing within 48 hours, host with us, join our mining pool, use our firmware, and we just try and advise and give them strategy so that they survive and thrive. That's what mining's all about, survivability.
Absolutely. Absolutely. Given that, I've got a quick question for you, Matt. Recently we've seen Bitcoin, just lose a tremendous amount of value in a very, very short period of time. I wanted to get your thoughts on that, and, what do you think precipitated that? And do you think we've got a lot more stormy weather ahead of us, or was that just kind of a one-off fluke?
Well, at the end of the day, I mean, that's a beast of a question, and it's not specific to cryptocurrency. What happened with Bitcoin, it's actually a very positive thing. Bitcoin survived. Look what just happened. U.S. equity markets just dove 35%, maybe. Right? All other assets completely imploded in the world. Companies are going under. They're going bankrupt. The government needs to bail out the airlines industries, oil companies. All these companies are going under, and Bitcoin survived. So what does that tell you about Bitcoin? It's actually a very positive thing. I mean, it sold off from, I'd say the sell-off was truly 7,800 to 3,800, and it's returned back up to 6,800. So I'm seeing strength in an asset, and gold sold off. Several basic, at the end of the day, the U.S. economy is the strongest economy in the world. We've got the largest GDP. We're self-reliant, and when U.S. equities roll over, everyone else is going to roll over, and that's what happened. And all other assets rolled over. But Bitcoin has survived, and that is excellent indication for the long term.
You're absolutely right. I can see where you're coming from on this, because while a lot of things are still struggling and perhaps months to even years out to somewhat of a recovery, Bitcoin came back pretty quick.
Yeah.
And that is a very powerful sign. Absolutely.
And it's, people discuss it's digital gold, all that stuff. Bitcoin is a risk on asset. It's an asset that has gone up significantly in value, and money managers, if they have a portfolio, when they need liquidity, they're selling their assets that they have profits in, or they're selling their most risky assets. You've got to get into the assets with the best fundamentals, with maturity, with liquidity, most importantly. And that's why everyone runs to cash and treasury bills and stuff like that when there's a crisis and when there's illiquidity. So Bitcoin being the technology in its infancy, Bitcoin being a risk on asset, Bitcoin having less liquidity, you're going to have that sell-off. But at the end of the day, several companies went bankrupt. A lot of other assets haven't recovered. And Bitcoin, which is fragile, is still around. It's still trading. And if you got your private keys, you got your coins.
Absolutely. What do you think of it's what I term the microeconomy that we all work in, this continuum? Because until I guess maybe a year ago, or maybe 8 months ago, I didn't realize that regardless of the price of things and where the world is turning or anything like that, this microeconomy of us, buying and selling miners or hash or power or infrastructure, this is always continually going on regardless of the situation. So what are your thoughts of that?
I love it. I mean, my partner and I, Mike and I were laughing about it 2 days ago. We were like, everyone's shut down, everyone's quarantined, but we keep getting our Bitcoin at 8 p.m. every night.
Right. Right.
Our mining rigs are running. We're getting our Bitcoin. If I need to send a transaction, I can send a transaction because miners are settling transactions. We were truly laughing about it. We were looking at we're on the phone, but we were, essentially just thinking, how crazy is this world that we're mining 180 petahash and everything is shut down, everything is stopped, but we keep getting our Bitcoins and those mining rigs keep running. Right.
And the transactions keep happening relatively instantly compared to the traditional, banking transactions too.
Correct. Yeah. It's a parallel financial system. That's really what it is. It's fascinating. It's this proof of concept of a financial system dictated by code. And it's been around for 10 years. And it's only getting stronger.
So Matt, yeah, you guys came out recently with a research report. We definitely want to touch a little bit upon that, or maybe a lot on that. What really was the premise of that whole article?
Well, we actually we were writing it up in December, had it just about complete in January. Kind of kept it in house for clients that we advise, some of our investors, and we understood that we were going into halving, and for miners that's a really big deal. So you have to position your risk, understand what you're getting into, and how that's going to affect your capital deployment strategy. And we also did that for the Bitcoin mining fund, Blockware Mining. It's an analysis for how we deploy capital and how we run our operation. So that was really the premise behind it. And we decided to release it a week, 2 or 3 days ago to the general public, because there was a lot of fear in the market. And when you deeply read the whole report, if you're in the top 2/3 of the network, you should be welcoming halving. You should not fear it. You should welcome it. Margins are going to get better after halving. If you're in the newest technologies, if you're in S17, S17 pluses or the 7-nanometer chip machines, and you have electricity, you're in a hosting facility and you're not paying CapEx, and you're around 6 cents, 6.3, you're going to do very fine. You're going to be okay. You're going to survive. And mining is just about survivability. As a hedge fund manager, you typically you're not making like consistent money every day. You make an allotment of money in 2 or 3 weeks of the year. Think about 2019. It's about positioning. You can't when you're mining or running a fund, you have to be positioned and you have to be there when the opportunity comes. If the opportunity comes and you're buying mining rigs, you missed it because you're waiting 2 months for Bitmain.
Yeah,
so
I've told that to many people.
Yeah. So if as long as you're mining and you get those 2 month or 4 to 8 week periods of just exceptional margins, you hit you hit 6 or 8 months worth of the year right there. Right. Think about April. I think it was like April 2nd when Bitcoin blew off higher to 5,400, and then it just sprinted to 10,000 in a couple months, in 2 months.
And I went all the way up to 14. It topped out almost at 14.
In late June, it peaked out at 13,800. If you were mining then, you made your whole year. So that's really what, it's really about strategy and survivability. You gotta be in the game for when those events happen.
Sure. We have a person here asking a question saying, what do you think the mining landscape will look like after the halvening? It's Shoeless Joe. Thank you, Shoeless, for the question.
Yeah, and like you're saying, if you've got the decent power rates, you're going to be fine. But
yeah, so we've modeled out the whole network, layers 1 through 8, and the layers are dictated by electricity rate. So 2.5 cents and lower is layer 1. And then you got 3 cents, 4 cents, 5 cents, 5.5, 6, 6.5, and 7 cents and above, being 7 and above being layer 8.
Okay.
So you have these layers, and that's the network, and it's like an onion. You're peeling off the onion, and at each layer, a miner may be running the old generation or the new generation. Now, next generation equipment has completely changed the game. An individual with an S9 at 3 cents, they have a higher break-even price than an individual with an S17 at 7.5 cents.
Okay.
7.5 cents. If you're running an S17 at 7.5 cents, if you're running an S9 at 3 cents, you're shutting off before someone with 7.5 cents S17. Okay. So that's a complete game changer. And that's why we discuss a lot of these retail miners, if they're placing at 6.3 and they have an S17, as Bitcoin sells off, all these S9s at 7 cents, 6 cents, 5, 4, 3, they're going to have to shut off first. All those TTTs, the mid generation, they have to shut off first. So if you're running next gen equipment and you're at 6 cents, there's going to be a 30% difficulty adjustment that saves you and
So as all the kind of the older generation machines kick out because they just can't continue to run, you then suddenly get a difficulty advantage. Yeah.
Exactly. Your margins get replenished, essentially. They become healthy again. The price of Bitcoin, think about it. We just had that 16% difficulty adjustment. Before that difficulty adjustment.
Down, right?
Yeah, exactly. So Bitcoin was at 6,500. Then we got a 16% difficulty adjustment. That's the equivalence of Bitcoin now being at 8,000.
Because you're acquiring more coin per mining second.
And we were watching this. We were tracking this. Our colleagues at F2 Pool, Thomas Heller, he's got an exceptional app, and he showed all the pools that lost hash. So there's a lot of Chinese pools. Slush Pool didn't lose hash. There's a lot of Chinese pools that lost hash over the past 2 weeks. And those are probably all S9s and those eBangs and those Canaans. The
less efficient generation miners.
Yes, the ones that are hashing between 10 and 13. Those all shut off in China, probably. China and Russia. And that's how we got this difficulty adjustment. And that has made margins more healthy for the people that are surviving.
So do you think when the halvening happens that we're going to see phenomenal, even a much larger drop in hash rate as pretty much all old generation becomes not profitable to operate?
If Bitcoin's still probably under $10,000, it's going to be a slaughter fest. S9s, up to probably 2 cents, 1.5 cents. S9s are going to shut off. All those T2Ts are going to shut off. And then individuals running S17s at like 8 cents, 7.5, 7 cents, they're going to shut off. And we've done a comparable analysis of Bitcoin at 10,000 before halving and 10,000 after halving in that research report. It's in there. And if you're running at 5.5, 6 cents, your profit margin is actually about the same before halving and after halving because of all the miners that are going to have to shut off. And that's why I say, welcome it. Don't fear it. If you're operating efficiently and you're running S17s, you have 5.5 cent electricity, and you're not paying for a facility you're hosting, you're fine. You're going to do fine. And it's going to take time. I mean, it's not, miners don't just shut off overnight. There's going to be 2 or 3 months of friction. And that's why
they're trying to hold out. They're like, it'll go up.
Exactly. So we think, we're not in the business of price predictions, but we believe that it might take a couple months after halving to get this healthy cleanse of the network, get rid of all the old technology, and then you have these efficient miners that are left, and they don't have to sell all their Bitcoin. That's what's important.
And then that's when the pressure from buying is going to drive up the price.
Exactly. So we think it could be a couple months.
Everybody's gonna. Yeah, that's really fascinating. The way you've lined this out. Can you tell us a little bit more about? I mean, you say hedge fund, and I guess I don't have really. To me, hedge fund is like gambling. Like, can you explain that a little bit more depth? Like, what your background is, how you got into it?
Yeah. So my partner, Jim Ropel of the hedge fund, he's ran equity funds for 30 years. And in 2017, we were discussing digital currency, and we decided to launch a digital currency hedge fund together. And it's really more investing. So we're looking at different assets. And
can you break down, just like in layman's term, to the everyday user? Let's say somebody doesn't really know anything about financial, who's just kind of curious about Bitcoin, doesn't really know a lot. What is a hedge fund? What can you explain that like in a really simple way?
Yeah, it allows you. A hedge fund really just allows you to have very flexible strategies. So if you want to buy Bitcoin and then sell futures, you're hedging. You're hedging like your Bitcoin risk. But if you wanted to just buy Bitcoin, hold the Bitcoin, if you want to trade around different price ranges, if you want to risk manage it, cut your losses. If you want to hold for the long term, it gives you a lot of variability, or I should say flexibility, with how you want to manage the asset.
So is a hedge fund just your money, or is it a pool of people's money that you can manage? Or?
Capital. Yeah, so we raise capital. We
Okay.
have money in it as well. But typically a hedge fund, you're going out raising capital. The managers also have money in it as well. That's good incentive alignment, right? So that's how we're set up.
And so you go out, you raise money from a lot of different investors. You kind of, I guess you pitch them a plan, like, this is what we intend to do with the money, and this is, kind of our strengths, our weaknesses, what can potentially happen in terms of profit gains, and how we would mitigate or control the risk and things like that. And they say, okay, sounds good to me. Here's my money. And then that gives you a creative, creative control or creative strategy over that to, make it hopefully generate a profit. That's the end game, right?
Exactly. So you'll have a strategy, an investment thesis, and then you carry out that investment thesis.
Okay. That's awesome, man. So how did you get into that? Like, did you just wake up one day when you were 4 and like, I'm going to be, doing this? And did you dream of these things, or were you like the normal kid playing on the playground? Like, I'm a fireman, like,
yeah. I mean, there was, like I said, I really started looking into Ethereum in 2015. One of my college roommates was actually in the ICO, and he was telling me about it. And I just kind of, dove down that rabbit hole. And as price confirmed, and as I took it to my partner and price continued to confirm, we realized this was something serious and we needed to we need to be there.
Yeah.
We have a question.
Yeah. I'll let you read it, Scott.
Yeah, from Greg Bennett. You know him?
Yeah. He runs the Pacific Northwest.
Awesome. So Matt is saying, Greg is saying, Matt, from your article, we can estimate that 60% of the network electricity consumption is old generation. Does that mean we will see a bloodbath in the hosting market with old generation equipment capitulation and open slots?
That's a great point. And I actually had a discussion about that today with a hosting facility and a few clients. I think there is going to be, number one, there's 2 pieces to that. A lot of the old gen is presently being run by miners with 4-cent electricity or less. I think a lot markets cryptocurrency markets are the least efficient markets, but it's still a market, and markets are fairly efficient. So old gens are going to flow. It's like dumping water on a mountain. It's going to flow to the lowest point. It's gravity takes over, and the liquid is going to go to the lowest point. Same thing with S9s. Everyone's going to sell their S9s, and the buyer is going to be whoever has 2-cent or lower electricity, or subsidized electricity, or running solar power and they have 0-cent electricity, right? That's where those S9s are going to flow to. They're not going to stick around with people with 6-cent electricity. They're going to Kazakhstan. They're going to Venezuela. They're going to Iran. That's where all those S9s are going to flow. I'd say a good majority of them are just going to get junked. But the ones that run, that's where they'll flow. So right now, I think a lot of S9s are with self mines. They're in China, Kazakhstan. I actually have a colleague who launched a fund, raised some family office, launched the fund in October of 2019. So just 5 months ago. And what they didn't buy next gen equipment. They went and bought millions of dollars worth of old gen, those eBank.
Wow.
They trucked them from China to because they have 1.8-cent electricity. So it makes more sense for them to get these old gens earned back in 2.5 months, because they can buy them for $50 or $60 and mine them until they, completely become obsolete. So to answer Greg's question, I think a majority of them are at self mines, and they're gonna flow to places like Kazakhstan, Iran, Venezuela. But there are still a decent amount of S9s in hosting facilities, and you are gonna get just balance sheets that get turned upside down, because these miners are not going to be able to pay their electricity bill. They'll just default on it and let the machines go, allow the hosting facilities to confiscate it and walk away. And that will create excess space, and therefore you have excess supply, and hopefully it brings down price for hosting facilities, or for miners that are engaging with hosting facilities. But yeah, they could definitely see some margin pressure. Greg's right.
We have a question from Shoeless Joe here, following up on Craig's question. But first, Ethan, why don't you just tell us a little bit about our sponsor for our podcast here?
Yeah, go ahead and bring up the. Do you have a screenshot of?
I don't have a screenshot today, but why don't you just tell us about Novablock?
Yeah, I was hoping to bring up a screenshot, but I think this is fine. Yeah, Novablock is new in the mining pool arena. I guess they came around summer of 2019, and in a very, very short time, they've become one of the largest pools available out there. And they believe, as it says here, that as mining shifts away, and as Matt was speaking about how mining will shift away from China and go into other areas like North America, they want to be a leader, and they believe that they can be a leader in this area by giving better information than the other pools are giving and greater transparency than the other pools are giving. We've had other guests on this show that have talked about kind of the dirty little tricks that pools can do without us even knowing it, without us even being aware of that. And Novablock believes that that's got to kind of come to an end, and wants to show you, the end user, how their pool is better by giving you that transparency that other pools aren't. Now, Scott's going to show you guys how to get a good deal from them.
Yeah. So thanks, Novablock, for sponsoring our podcast here. What you want to do is go to novablock.com, and on the top right-hand corner of their website, you'll see the sign up button, and there's an invitation code. You could just put offered 18. That's OFFORD 18. And when you do that, you'll get a permanent reduction in your pool fees down to 1.8%. And then all these, of course, if you have more hash power that you'd like to experiment with, you could send them more and probably get an even lower rate.
Yeah, they're definitely willing to work with you. If you want to send them some serious hash power, give them a shot. Yeah. See what they can do.
All right, so let's go back to Shoeless Joe's question here. He's asking about production. What's a good way to get a view on those production rates of these miners? How many are made? How many are sold? For next generation miners, and other than just watching the net hash on a daily.
I have this question too, so I definitely want to know your answer, Matt.
Yeah. So we've. It's difficult to get the exact, unless you're talking to the manufacturer, to get the exact amount of machines that they've sold. Those numbers are held tight by the manufacturers. But what we can do, when you see the report, we can estimate out a lot of hash. Hash basically doubled from late May of 2019 up until February of 2020. That was basically all new gen equipment. So you can, right off the bat, you could say about 50% of the network from that point forward was next gen. That's where that hash was coming from. And prior to that, I would say 10 or 15% was attributed to next gen as well. So in our report, that's really how we get that split of 40%, 60%, old gen, next gen. And of course, we spoke with the pooling team. We spoke with F2 Pools team, as well as the manufacturers to get peer review. And yeah, they all four really agreed with our analysis there.
Yeah. What are your thoughts on, so, I agree with you that we've had a taste of next gen equipment coming into the market. I think we're all very aware of the S17 plus, 73 terahash. What are your thoughts on the S19? Is that going to be much of a big game changer? Should people be holding out for that? Or is it, just kind of a marginal improvement over the S17?
I think it's a marginal improvement in terms of where the price points are and the friction and lead time and then the uncertainty of brand new batches, right? Defection rates with brand new batches. in terms of our fund, we'll probably wait to deploy until September. I want to see it shake out. Too many of these mining rigs coming from the manufacturers, those first few batches are just, the defection rates are so high. You just get slaughtered. So we're gonna, and then you also get an opportunity to see what happens with the halving, right? So from a risk reward, I would completely buy S17 pluses, or if you can get it from someone stateside, like us, Blockware Mining, I would do that. I wouldn't be touching S19s until maybe July or September. July.
Well, that's when the first batches are supposed to ship to the US anyway. So,
well, they're supposed to be like a May, June, July batch
for the China market. Yeah,
for the China market.
I'm not deploying capital until like July. So you're really getting in late August, September batches, and allow the manufacturers to fine tune these machines.
Greg Bennett has another really cool question here. What is your prediction on the S19 pricing? Will it be able to support a 3K price after the halvening? Does it make sense to wait? Which is what do you think? You just said to.
Yeah, I mean, it all depends on where Bitcoin's at, right? There's two factors. Well, number one, it's all about what's the margin. What are these machines earning? And that's dictated by the price of Bitcoin, your electricity rate, and then what difficulty is doing, right? So if we go through halving and Bitcoin's still around 10,000, all these miners are all the old gen's gonna wipe out. Next gen up until like 6.5 cents, that's all gonna wipe out. You're gonna get a massive reduction. So margins will get healthy again. So you got to see what the margins are like. I anticipate $3,000 for an S19 after the halving. If Bitcoin's only at 8,000 or so, I'm not optimistic. I wouldn't be a buyer. So that's why I say as well, we're very high. It's very highly probable we wait for after the halving to deploy more cash.
Yeah. So right now, I mean, if you're going to buy an S19 that's going to deliver in June, you might pay $3,000 right now. That's for a 110 terahash machine at what is it, like 30 watts per terahash? Something like that?
Yeah.
So that you're paying maybe $27, $28 per terahash. I mean, that's reasonable right now. In the last 4 years, obviously, when the block reward is 12.5, but now that it's going down to 6.25, $27, $28 per terahash to buy the most efficient machine. I don't know. It's a tough call right now.
I wouldn't deploy cash prior to the halving. I want to see what happens with. I think even if there's a premium to do that, I think that premium is worth it. I'd rather pay the premium and deploy the cash, give them cash after halving. I want to see. I want the market to show its cards. I'll pay to see the cards. And ultimately, like I said, I'd rather just get S17 pluses today, and then you could throw a firmware on. I mean, we've got these S17 pluses hashing at 95T, so I'd rather do that. And everything's stateside. We with global logistics right now, it's a bit of a mess, right? So you're incurring this risk of global logistics because things are a bit messy in the world. So I don't want to take on all those layers of risk.
Absolutely.
I want to stuff that stateside.
I've got one last question for you, and then I think we're going to wrap things up. The question that I have for you is, if we look at, have you seen the stock to flow model charts for Bitcoin?
Yeah.
How it shows after the halvening, then we always get a nice big bull run and things like that. Do you think that history will continue to repeat itself? It's now predicting that the next all-time high will be somewhere in the $120,000 range for a single Bitcoin. Do you think that's realistic, or do you think, I'm going to sit back, I'm going to wait, just this one's different?
It's a market. I'm not in the business of price targets at all. I never do price targets. What I look at is how healthy is the market and where are we at in the market cycle. If you get events, I mean, what's going on right now in the global macro and the US economy, it's all brewing a perfect storm for Bitcoin. So that's what's important. I'm not going to tell the market where it's going to go and where it's going to stop, but there's all this printing going on, and there's a ton of printing going on. The equity markets have rolled over, and it's doing is it's making people reevaluate the system. 2008 is why Bitcoin was born. 2020 is what may make Bitcoin start to get adopted in specific areas. I mean, your markets. So a market, when you allow speculators and traders to have a secondary market like we have, you have technology in its infancy like Bitcoin, right? It's in its infancy, and what it does is it allows people to imagine the ability for a new financial system, this new parallel financial system. And when our present financial system is under such stress, now people are imagining that, hey,
they're looking for an alternative.
Yeah, these speculators and market participants are able to see the possibilities of Bitcoin actually happening. And when you get a technology in its infancy where the total market cap is smaller than Facebook's stock, it's tiny. It's a tenth of gold, and you start and you have a secondary market. Right, it's not a private company where you can't trade it. There's a robust secondary market, and you allow these speculators to start envisioning like, oh my God, this might happen, and they all start speculating and trading. That's how you get parabolic bull markets. Technology's in its infancy, speculators and secondary markets, and them beginning to envision the possibilities that this actually comes true. And when you get that, you get significant price discovery. You get price discovery, and that's how you get parabolic bull markets. And I don't know where it's going to go, but that's why I don't give price targets. But the markets repeat themselves, and it's because they operate off human psychology. Human psychology repeats itself. People get greedy. They get fearful and they get greedy. So people start, and on top of that, we're discussing a little pebble. Bitcoin is a pebble. It's smaller than Facebook's stock. Someone goes in and injects tens and tens of millions, they're going to move the price up. So it's this perfect storm. A lot of people are losing confidence in the present financial system. They've seen this show before. You don't get crashes like this. These crashes are supposed to be once a generation. And now it happened in 2001, 2008, and now 2020.
Yeah.
And people are going to look at it and go, hey, they just print. Here's the thing. We printed.
I know.
Trillion or 6 trillion? Was it 3 or 6?
I know. I keep, like what? Yeah.
Was it 6 trillion? 6 trillion. That number is so gigantic where it sounds like the end, right? It sounds like the end. This is not how this works. Monetary policy isn't turn on a switch and we're done. These are processes that last usually more than 1 year. We're not done at 6 trillion. It sounds like because the number's so big, but these are it's not about the number, it's about the process. And this recovery is going to be a process, and the likelihood is it's not going to be just a V shape straight up. I mean, there's a lot of damage. There's a ton of damage in the economy. In 2008, construction worker, it was really real estate and financial services that got slaughtered, right? Construction workers, laborers, real estate companies, and then banks, financial services. People that were CEOs and managers, they got fired. They went and became taxi drivers or bartenders or busboys, or worked at restaurants, hotels, whatever. Those temporary jobs. Well, it's 2020 and all those temporary jobs are already wiped out. So once those, those service jobs, they start to get laid off, they're There is no Uber right now. There is no taxi drivers. There is no restaurants. It's all shut down. So that's a little bit of my fear. I hope that doesn't happen. You know, I'm an optimist. I want what's best for our country, our citizens. You know, I don't care if Barack Obama's in the presidency or Trump's in the presidency. You support your president, you support your country, you support your citizens. You know, so I don't hope that happens, but in the scenario that it does, a lot of people are gonna lose confidence in the present financial system, and they're gonna go, this is kind of interesting. This is dictated by code. Our present financial system is printing more, and this one is halving its printing. And right, because we're going through halving. So our inflation rate's getting cut in half, and it's dictated by code. And people start to envision maybe this could work out. And then there's a secondary market that's so tiny, and you get these speculators, and the technology's in its infancy, and that's how you get parabolic bull markets.
So yeah, we're going to wrap it up here in 30 seconds, but why don't you tell us a little bit about tracking the difficulty adjustments? Do you have a good recommendation for a site to do that?
Yeah, we on our Bitcoin pool, we have a resource center. So you go to blockwaresolutions.com, go to our resource center, and we track difficulty adjustments actually. So you can do it off blockwaresolutions.com, off our resource center. I think that's one of the biggest things that I track actually, difficulty adjustments in the future.
Yeah.
So
fantastic.
Yeah.
Can you tell our audience what's a good way to reach out to you in case they have other questions or they just can't go to sleep tonight and they feel like keeping you up?
Yeah, you can follow myself and the team on Twitter. My Twitter is MJ MJDSouza 2. You can follow Blockware team on Twitter. Go to our website, blockwaresolutions.com. You can contact us directly. We're always happy to ask questions, whether it's about mining rigs or Bitcoin or markets. Yeah.
Awesome.
Great.
Yeah.
Well, thanks for hopping on our podcast today. And it was great talking with you here.
Absolutely.
Yeah.
Thanks, guys.
Thank you for your time, Matt. And the next time I go to Vegas, I definitely want you beside me because you seem to know things that I need to know.
Sounds good. Take care, guys.
All right, guys.
Take care.
Bye-bye.
Thanks. Bye.